Hey everyone, this week's episode is brought to you by Coinbase Prime, Ledger, and OurCrowd. Really love these companies, proud to call them sponsors. You're going to be hearing more about them later, but for now, on with the show.
Close to 10% of hedge fund assets could ultimately be in crypto within the next 5 years. Binance alone did a $15 million token sale, and the token is now worth $100 billion.
All right, everyone, welcome back to another episode of On the Margin. Today, I am joined by the kicker of Hornet's Nest, the starter of companies, and the author of books, Mr. Ryan Selkis. What's going on?
That's quite the intro. How you doing, man? Good to see you.
My first question to you is just how? How does this all get done, the sheer volume? But as I was going through, this was actually really hard to prep for because I was like, oh man, this is a really good point. I got to make sure to ask him about this. Oh, this is actually a really good point. Okay, I got to make sure I got enough time for this one. So I think the strategy here is just get through as many of my possible questions as we can, and then just maybe shoot the shit about a couple of things. But I love the way that you kick things off here, and I want to spend like a good portion on your big narratives that you kind of see coming down the pike. And your opener here just like really spoke to me. So if I could quote you here for a second, you start things off with, "Why are you reading this? Maybe you're among nearly half of millennials and Gen X investors who said it would take a miracle to retire. You're worried about skyrocketing public debt, not so transitory inflation, and what happens when we finally experience a hike in interest rates. For you, crypto is a life raft." This one's really spoke to me, man. So talk to me about this breakdown of institutional trust. Why is that the first big narrative that you kick this thing off with?
All right, so be honest, you're just reading this for the first time, and that's the first paragraph, so that's why I got to quote it. Right? So.
Yeah, I did zero prep for this. I literally just opened it up. I was like, shit, I gotta say something.
Yeah, and now while I answer that, I'll give you, a little bit more time to read some more. No, I think it kind of speaks to the tailwinds right now and the why now element. I think a lot of the folks that got into crypto early. We're really here for political reasons, right? There's a lot of libertarians and gold bugs and, borderline chicken littles about, government spending and the decline of state capacity and just like government function. And I'm no different, right? Like my first exposure to Bitcoin was in the summer of 2011 during the debt sequester, right? And unfortunately, I'm not a developer, so I didn't tinker around with it. I'd kind of read about it and then saw that there was no place to get it except for like this crazy Japanese exchange. So I just kind of wrote it off. It was either that or like go to a cafe and give someone cash for a USB stick, which kind of felt a little too close to a drug deal for me. So I ignored it, but then I ended up keeping tabs on it and eventually came back to it in 2013 and kind of went all the way down in the rabbit hole in 2013. But to a certain extent, I think we've just seen a number of like cascading failures at the state level, right? State being the nation state level, and between like mainstream media, the fourth estate, and obviously just the rest of the government. Confidence is in many respects at an all-time low, and if it's not at an all-time low, it kind of seesaws between like all-time low for like the losing party. And then like some normal amount of confidence in the government for the winning party. And that's not sustainable either. So I think we're starting to come back to a point where crypto for political reasons and like a life raft against like dysfunctional nation states is back in vogue. I think the difference is in 2013, it was like a libertarian party. And in 2021, it's much more bipartisan where people are looking at this and saying, this has great like tailwinds because the state is dysfunctional, and it's got all this cool tech that you can build around, and it's like a bet on future generations and digitization of the world and so on and so forth. So there's to a certain extent, it's kind of like a return, but at like 100 or 1,000x magnification of the thesis that drove a lot of people early on. It just so happens that thesis is more mainstream now.
Yeah. I really love the way you frame this because it's kind of the lens that I look at the space through. And if you call it whatever narrative you want, call it the fourth turning, the failure of institutions, whatever it is, I think you can look at crypto as kind of a pushback or direct response to failures that I think especially probably young people see across a whole swath of different institutions today. So let's maybe game that out in terms of how you play that from an investment perspective, because maybe the first big failure of institutions was on the financial side of things, and the direct response to that was Bitcoin, right? So that's the narrative that we're all very familiar with in terms of, bank failures, money printing, and then you get Bitcoin, this very scarce, sound source of money. You spent a lot of time, just to prove to you that I actually did read this, in the rest of your theses, talking about things like Web3, NFTs, DAOs, and bridges, and some of these other things, right? So how connect the dots with me between failing institutions, maybe it's media, maybe it's education, maybe it's on the corporate side of things, and some of these new innovations that we're going to be getting into later on in this discussion.
The big theme that, and I don't know exactly why it's happening all of a sudden. I mean, part of it is because the internet's ubiquitous, and you're seeing like more like decentralized communities in terms of social media. I kind of feel like Web 2 and social media was kind of the necessary bridge to get the world and society just acclimated to community governed systems. So to me, I think that everything is kind of hitting at the same time, right? You've got big tech companies that, because they're monopolies, are starting to become viewed with skepticism because they're disrupting so many legacy businesses on the one hand, and on the other hand, like they're just monetizing their end users. And now the question is, is big tech actually good for you? Like, what are some of the negative consequences? So trust in kind of big tech has gone down. We already talked about the government. I think, media has already been disrupted by distributed media. So, that's not necessarily social media, but it's like the long tail of media that's now, got, fat tail incentives, individual contributors that are kind of creating their own Substacks and making an order of magnitude more than they did at their publication, for instance. Basically everywhere you look, same is true in science. The same is true around COVID. I think entertainment, right? You look at the take rates of like Hollywood and the music industry, versus what happened in gaming when they actually, kind of pivoted and leaned into like the internet models. Yep. Everything now is starting to look obvious to mainstream audiences. And I make a comment kind of somewhere in the document that's essentially like, once you get a taste of like token incentives and like user incentives, you start to like view new products differently, right? Especially if you're like an early user to a product, or like a company that just raised like a Series A, and like you're one of the early like net promoters. I'll give you an example, like, and I'm picking on them because it's probably the least crypto-fiable company or whatever, but maybe not, but like I use the product and I promote it because I love it. But this thing called Fight Camp, it's basically like this freestanding like heavy bag, and it's like Peloton for boxing. It's like saved my life because it's during the pandemic that was my preferred workout. You can't really do it, and I finally got this thing. It's been awesome. But they've also raised a ton of money, and I've been like a net promoter of them for like a year, and I know that that's kind of driven some volume, and I probably would do more if I had some like actual economics, right? Mm-hmm. And it doesn't make sense, to like have me as an advisor necessarily, because I'm just like a user that has like a medium-sized following for them. But with like a token model, you would have a pool for people exactly like me, and I'd probably be making a decent amount of money just as like a net promoter as their stock continues to rise, as their kind of community incentives continue to rise. This isn't unique to me, right? Like this is like massive issue with like gig economy workers and Uber and Airbnb and all these big marketplaces wanted to do this, but our securities laws hold companies back from doing this. So I think users are going to start to be they're going to basically start to have the kind of look around and say like, what the fuck? Like, why I'm helping you bootstrap this network. You're ultimately monetizing me. Why aren't kind of things a little bit more evenly split, whether they're a creator, a net promoter. So in like a really cynical dystopian view, I guess crypto is going to make everybody a multi-level marketer. But you take the good with the bad, I guess.
God, that's exactly the PR that we needed. Excellent job. I'm glad we got that meme out into the world. All All right. So I want to actually ask you then maybe that kind of
Well, it's actually I'm kidding, but it's actually marginally better because you're not actually a multi-level marketer where you're like stuffing a bunch of physical inventory down the throats of people like lower down the totem pole. You're literally, it's all digital incentives, digital goods, and whatnot. So anyway,
yeah. I don't want to totally blow up his spot, but the next time you see Jason in person, ask him about Veeam, his days at Veeam, or Verve. That will lead to an interesting conversation. But that actually does kind of segue into this next prediction of yours, which was, Web3 is inevitable. And specifically, you kind of said that in 2030, Web3 is going to grow an order of magnitude. I kind of have my own thoughts and frameworks for how large this space can be, but Web3 is kind of like taking over, it's kind of usurped crypto as the new branding for our entire space in general. So maybe I thought it could be useful, like how do you define Web3? And when you say it's going to grow an order of magnitude, do you have any more specific thoughts about how it could look, this whole space could look differently 10 years from now than it does today?
I mean, I should start by saying, I don't know how everybody's going to come up with their own definitions. And maybe there's some people that will try to like make Web3 and crypto like different. I actually think they're the exact same thing. I think that Web3 is just a marginally better framing and a little bit more appealing to end users that have had a negative reaction for one reason or another to like the term crypto, because it sounds scary or it's, kind of has like baggage associated with regulation or whatnot. So it's a little bit of a rebranding exercise. And I think it's actually a pretty smart one because NFTs don't really feel like crypto to a lot of people, right? People think about crypto, they think about like, the volatility of Bitcoin, the volatility of ICOs. And with NFTs, it's like, these are cool, like digital art pieces. And yeah, I buy them, sell them, and they're collectibles and they go up and down in value. But it's not, it's a little bit more individual centered, right? Versus, kind of tribe centered with some of the early currencies. And I think just thinking about like, okay, Web 1 was read, Web 2 was like read, write, Web 3 was, read, write, own, which is something a couple people have quipped, including Ashid on our team. I think that's like a good logical progression versus like crypto is something totally out of left field. And it's really just about money. So to me, like Web 3 is like an all-encompassing term that covers the cryptocurrencies, like the layer one systems like Ethereum that are kind of moving, different smart contracts and moving different assets around for settlement. It covers NFTs, like the non-fungible elements, the other ERC20s, which could be anything like distributed hardware resources or, securities tokens or, the whole kind of slew of things that you could add. And then there's DAOs, which are basically like how are these systems governed, and then DeFi, which is how does the system have requisite like liquidity to actually function as a parallel economy. So like all those like five or six different pillars can all be thought of as like subsets for Web3.
Yeah. So a couple more specific questions for you there. I guess one, and I'd love to get your thoughts on how you see this playing out specifically next year, right? So one big narrative that's kind of playing out is these, let's call them layer one wars, right? But it's the way it's sort of playing out is like the ETH and the strong community that they've kind of built and their scaling plan for layer twos built on top of Ethereum versus kind of some of these new upstarts, right? In the form of Solana, Avalanche, the Terra ecosystem, whatever it is, take your pick. How do you kind of do you see those two different groups as being competitive? Are you a believer in the multi-chain world? Do you think it's all going to be built on ETH and they're going to scale that way? I mean, what are your general opinions on this kind of narrative that's playing out in real time right now?
I don't think that, I mean, there's no doubt in my mind that there's going to be kind of a multi-chain future. And even like Ethereum is multi-chain, right? Like, the roll-up centric view of Ethereum and kind of using the beacon chain or kind of the base chain of Ethereum as a settlement layer, like that's already baked into the goals of the system. And if you think about Polkadot or you think about Cosmos, they're kind of structurally similar, where you've got these hubs or these parachains or kind of master chains that are working as settlement layers for a universe of blockchains that can be custom fit for different purposes. I think the bigger question is, how many different chains, how many different standards will we have? So there's basically like EVM compatibility and then everything else. So, is everything going to be compatible with the Ethereum virtual machine? No, not necessarily, right? Because you're going to have Bitcoin, and you might have something like Solana, maybe a couple of others. But I think at the end of the day, things probably coalesce around a couple of different standards, with EVM compatibility probably persisting forever, right? That seems like one of the standards that is not going away, and then it's really just like iOS versus Android. There's going to be maybe two or at most three different operating systems that people build on top of, and that's going to take years and years to play out.
Yeah, absolutely. I mean, I think it is funny to point out, and even I know Bankless got some shout outs in that in your theses. And it's funny, I've listened to David make this exact argument where he has even a clever little phrase for it. But, a lot of the criticisms that get levied at these alternative layer ones were in turn levied at Ethereum by, folks in the Bitcoin community in general. And I'm not one of these people that's so smart that I know the future, or I wouldn't even be able to make bets in one way or another. But I do think there's a certain level of irony to this whole saga that's playing out right now, because a lot of what Ethereans got criticized for, they're now like taking that and dumping that on other ecosystems, which I personally find counterproductive. But what do I know?
Yeah, so this goes to Suzu's comments on Ethereum and abandoning the chain and all that, and I think it's probably extreme language that was used, but the broader point that I think he was making was no one gives a shit out of the newcomers that you bought Ethereum 100x ago. They want to be able to use the blockchain, and right now Ethereum is basically unusable. So there's a lot of infrastructure, and that's a big theme for next year is not just scaling, but interoperability and the bridges between different chains, right? So it's one thing to have layer 2 chains available for different applications on Ethereum. It's an entirely different issue to actually have chains that talk to each other and are seamless from an end user perspective. So you could have things like Solana or Avalanche or some kind of up and coming chains that do siphon off some market share for no other reason than they are simply faster and more scalable. Yes, more centralized probably, but still more scalable in the near term. And with gas fees costing you anywhere between 30 to a couple $100, who cares? There's no one is going to sign up for Ethereum versus Solana if they're a newcomer with a couple $100 to play around and experiment with these new applications, because you can't even do a single application.
Howdy, everyone. This episode is brought to you by Coinbase Prime, the leading prime brokerage solution for all things digital assets, providing secure custody, trading, and financing to an institutional suite of clients. On the retail side of things, I am more than happy to make this endorsement because I have been a customer of Coinbase since the day that I got into crypto. I still keep the vast majority of my assets there, actually, and I do it for one reason and one reason alone, so that I can sleep easy at night knowing that my funds are safe. It's the same reason when family or friends ask me, where should I buy my first Bitcoin? I direct them to Coinbase. And now, finally, when institutions are starting to ask, what's the most safe infrastructure to use? I only point them in one direction, to Coinbase Prime. And the reason that I do that is because it is peace of mind. When it comes to security, everything is top of the line on this platform, and it's a white glove experience to boot. They've been securing client assets at scale for 8 years, which as of Q2 of this year is $180 billion. They have an industry-leading insurance policy, and they're audited by blue chip auditors so that you can sleep easy at night too. So stop listening to me, click the link at the bottom of this episode, and go check them out for yourself. And when you get there, tell them that I sent you, because I love to get credit. So I have a question for you on that. I forget the way you actually phrased it in one of your narratives, but it's basically the idea of sector diversification in general. And maybe, one thing, yeah, right. So maybe we're at this phase now where even you could actually make a pretty solid argument that for blue chip DeFi, that's been in a bear market for a period of time. And Bitcoin, it's certainly not in a bear market, but it's traded sideways, right? Basically, since it's that top that it made in May. While you've had other sectors like metaverse most recently, those things are just screaming along. Mm-hmm. So, and obviously the alt L1s have done really well recently as well. So, part of me hears that and is like, yeah, this stuff does way more than the ICOs did back in 2017. But then another little part of me is like, do they really do that much more? like there is some basic functionality there, but do they really do that much more? Like, do they deserve $40 billion valuations? I just don't know. And, it is funny, like when you talk to people that moved into this ecosystem, I was joking before, when you talk to people that started in crypto in 2020, 2021, they're like, well, yeah, we had that bear earlier this year. It's like, that is not a bear market. A bear market is soul crushing, where you question your existence and your decision to move into this industry, and you ask God, why you're so stupid. So I don't know. Part of me thinks maybe we are seeing sector diversification and things are going to be a little different this time because we're way different from where we were. But part of me says, in a market of fear, I think a lot of this stuff just goes down together. So I don't know what your thoughts are there.
I think that's true to a certain extent. One of the primary differences this time around is valuations might correct, but I don't think activity subsides. And that's important, right? Because from a sustainability standpoint, there's never been more capital backstopping the ecosystem. A lot of the high valuations in non-Bitcoin assets or non-Ethereum assets are the result of Bitcoin and Ethereum related wealth, right? Mm-hmm. So those inflows are coming from somewhere, and typically, capital comes, in things go up, and then people kind of trickle down, but the capital doesn't necessarily come out of the system. Even when people are kind of taking cash out, very often they're taking it in stable coins, right? Versus like taking it back into their kind of real world savings. So, and there are tax reasons to do that, and the like. So I think I do believe that we've already seen, and this is something we've been talking about for years at Messari. The 2017 like everything is a payment token thesis was completely stupid. But the SEC to a certain extent is responsible for some of that, because you have to essentially de-securitize some of the interesting elements that you could have in some of these valueless governance tokens. I think if you're contributing to a DAO and you own a piece of one of these networks, it's basically like being a member in a cooperative, whether that's like an insurance mutual or a cooperative like REI. Like, it's user owned. So should REI be delivering proxy statements to everyone that gets a receipt because they shop there? I think that's what we're talking about to a certain extent, and I don't know REI's like specific use cases, kind of besides the point. Like, I don't know how they deal with all that, but I think the reality is the rules that we're working with for large chunks, a high percentage of the different sectors are basically they're encumbered by retroactive compliance with 80-year-old, 90-year-old securities law that doesn't really apply to some of these new networks.
Yeah, I totally agree. I actually, on that idea of, I really like the way that you actually phrased this as one of your narratives, which is permanent capital coming into the space. So back in 2017, there actually was a tremendous amount of capital that got raised, but it was raised in the form of Bitcoin and ETH, right? Primarily for ICOs. You definitely did have some venture investment coming in at that time too, but I remember reading you saying that DCG in 2015 raised $25 million, and that was like one of the largest funds ever at the time. And it's just hard not to pay attention. We cover the news, and you're seeing $500 million raised from Copper, and $400 million raised from Fireblocks, and 750 for Celsius, and 725 for Forte. It's just the amount of capital here that's being raised is just colossal. And I have to imagine that part of the reason why that is everyone. It's a land grab, but I would imagine part of it's to survive the next bear market. So how much of a difference do you think this particular form of VC capital is? Like, is it different this time? Is it going to be more permanent capital? Or I guess the counter narrative being VC funding tends to call market tops because VCs chase just like everyone else. So curious to get your thoughts there.
I still think that there's going to be a lot of dry powder in these funds. And there's going to be a lot of dry powder in the crypto funds. There's also something like close to 10% of hedge fund assets could ultimately be in crypto within the next 5 years, right? Like there are big inflows coming from like newly formed dedicated funds and also like pockets of institutional funds. Perfect example is from the our Series A 0.72, right? Like they're getting much more active in crypto. They've made several investments. I think we were there first, at least by a few weeks, and they've been pretty active throughout the rest of this year. And I co-invest with them in a lot of the things that they do, but they have a dedicated team now that's focused on crypto, and that's a kind of a pretty rigid, well compliance like legacy venture shop and hedge fund. So I think as more like fintech oriented investors like that come into the market, the line is going to become increasingly blurry because it's just like there's no longer any internet related funds. Everything is basically, you just call them venture funds now, and most of their investments are in internet related stocks. And this is true, by the way, like even when I started in venture capital in 2008, kind of right out of school, I worked at a VC called Summit Partners, and I think there was like 5 different verticals. We had healthcare practice, software, financial services, and like consumer, right? But now all those are just like tech,
Right.
For the most part, or like a good chunk of them are tech enabled. But I think the same is going to be true with crypto over time.
When it comes to crypto, security and custody is paramount. Introducing this episode's sponsor, Ledger, your secure gateway to buy, exchange, and grow your crypto assets. I know I've got a smart audience, so I'm assuming/hoping that most of you already have your Ledger hardware wallet, but just in case you don't, this is how I think about it. I wouldn't get into a car if I couldn't wear a seatbelt, and I don't operate in crypto unless I can do it from my Ledger hardware wallet. Crypto is really exciting, but it is still the Wild West. There are lots of risks, and Ledger is the easiest way to make sure that you are still protected. And the best part about Ledger is that you don't need to make any trade-offs between security of your funds and utility of your assets, because Ledger has Ledger Live, which is a software. It syncs right up to your Ledger hardware wallet, and you can do anything that you'd want to do with your crypto assets. You can easily send and receive, you can buy and exchange, and you can get access to staking. And they've actually started to aggregate some of the best DeFi apps and services out there. 2 of my favorites, Paraswap, a decentralized aggregator, and they've got Lido for staking. And stay tuned, I'm going to keep you guys updated. They've got some really cool services coming out soon. Aave, Compound, and 1inch among them. So if you take one thing away from this, guys, please make sure that you're protected in this space. Get yourself a Ledger hardware wallet today and start using the Ledger Live app. Click the link at the bottom of this episode. Thank me later. All around the world, tech companies are innovating and driving returns for investors. OurCrowd takes a global bird's eye view of private markets and brings the companies with the greatest growth potential to you to invest in. One of my favorite quotes from Jim Bianco is when he says, "I hate it when people tell me to invest like Warren Buffett. I wish I could invest like that guy. He sees all the best deals." Well, OurCrowd is addressing exactly that issue by bringing private companies to you when you can take advantage of them, i.e. when they're still early. OurCrowd's accredited investors have already invested over $1 billion in growing tech companies, and many have benefited from the 46 IPOs or otherwise sale exits that they've experienced on the platform. Join the fastest growing venture capital investment community at ourcrowd.com/OTM. Again, that is ourcrowd.com/OTM. If you take one thing away from this, be it that you should include OTM when you join OurCrowd. We'll see you soon. I tend to agree with you. Same thing. So I've got a couple more questions. We skipped one of your these NFTs, bridges, and DAOs, and I want to get your thoughts there. And this is where I'm going to draw a little bit on some of the stuff that you wrote later on. And again, I'll just use this time to, guys, if you want the full detail here, I'm trying to give the best summary that I possibly can from my own lens of interest for what Ryan wrote about, but there's a tremendous amount of information in here, so I highly recommend you go read it for the full yourself, and maybe we can link it in the show notes here.
Great.
Bridges, NFTs, and DAOs. Talk to me a little bit about Well, let me ask you first about what are your thoughts on just the NFT market in general? I know you got a whole section there, but what are your thoughts on NFTs in general? And maybe I could kick it off with you. You said that NFTs were kind of the ICOs of this particular run. I actually agree with you there. I've got my own little pet theory for NFTs, but walk me through why they got included in this big narrative, what your thoughts on them, like the rise of NFTs are in general.
So I should clarify that when I call them like the ICOs of this cycle, that's not a disparagement, right? I think there's a lot of folks that are critics of NFTs that are like, oh, this is basically ICOs all over again, and I think they're making some like poignant like criticism and like, oh, we've seen this movie before and it's going to end in tears, and it's actually a really dumb criticism because Binance alone did a $15 million token sale, and the token is now worth $100 billion. So there was 20 billion or so that was raised via token sales in kind of that last cycle, using like the most aggressive assumptions, including like the full like 4 billion from EOS alone and whatnot. So Binance alone has returned 5 times the entire ICO bubble, right? And obviously, if you kind of extrapolate that out and you look at Polkadot and Avalanche and Luna and Solana and all the other kind of token sellers, as a class, they did phenomenally well. And even for retail, right? You talk about like VCs getting in early or getting these sweetheart deals. Even if you were late and you only invested like after they launched publicly, obviously they've gone vertical. Solana is something like 1,000x for the early crowd sale participants in CoinList. Terra, a couple 100x since last summer. They're Polygon and Matic, same thing. And that's just like the layer ones. And then obviously there's all the stuff in DeFi and whatnot. We've seen similar dynamics in the NFT market. But when I say they're like ICOs, what I mean is the whole class, I think, is going to grow 100x over the course of the next 5-6 years, or 5 to 10 years. There's another asset that also grew 100x in that 10-year period, and that's Bitcoin. So if you look at Bitcoin from kind of late 2013 to today, it's literally gone from 10 billion to over $1 trillion in value. Back in 2013, that was considered a bubble, and people like kind of cried about the fallout, in the bear market afterwards, which was pretty severe and almost wiped some companies out. But if you think about like digital gold versus gold and how much market share Bitcoin ate over the course of the last 10 years, it's basically, I think, very similar to where NFTs are today. Versus where Bitcoin was at the blow off top in 2013, right? So even at that height in 2013, the market cap for Bitcoin was around like 10 or 11 billion. And of course, we're at like 10 or 11 trillion in terms of gold. Today, digital art is the exact same thing. It's 1% of the physical art market. And so, you're going to have like, 1/10 of 1% of the physical art market. So you're going to have some like similar like 100x potential for NFTs as a class. The difference, of course, is like ICOs, 99% of them are going to be like very wildly overpriced JPEGs, because there is no cap on the number of units or the number of different types of NFT experiments that can be run by design, right? So you're going to have to look at each individual project on its own merits and figure out like whether there's something real there. For art, that's going to be its rarity or its uniqueness or kind of intrinsic value, and then at the other kind of extreme end, you're going to have NFTs that are like real world interest in something. So your property is an NFT, stocks are NFTs, so digital securities I think will ultimately use that same standard, and then everywhere in between, they're going to be a number of innovations that have to happen kind of sequentially in order for them to be interesting. So securities probably come last, collectibles and JPEGs come first. The question is what's next, and I think you kind of alluded to it. The answer might be VR and gaming. in terms of what comes next, because that's where there's kind of the cleanest overlap between the early experiments we're seeing today and like mass market appeal for digital goods.
Yeah, I think anyone that was a big enough nerd when they were in like 7th or 8th grade inherently gets the appeal to gaming NFTs. I've told this anecdote on this podcast way too many times already. I collected skulls when I played Halo in 7th grade just so I could get a new set of armor. I probably put 60 hours into that, got nothing out of it other than my 3 friends who came regularly over to my house saw it, and we were like sick. So I totally understand the value that gets placed on that kind of stuff. It like intuitively just makes a lot of sense to me. So, you know, I didn't also mean to, FUD NFTs. NFTs also, it is funny because I came in later than you. I came in 2017, and 2 of the big narratives that were going on around then were, there was like DeFi, NFTs, and DAOs, right? So DeFi obviously happened first. NFTs happened. DAOs are kind of playing out currently. NFTs, I think the reason why I think they're similar to ICOs is actually the funding mechanism, how like what drives their prices, because ICOs get a really bad name. They were directionally correct, right? You were like seeing the shitty first iteration of bootstrapping a network by selling ownership in that network. Hugely directionally correct. And I think DeFi borrowed properties there, NFTs borrowed properties there. But what happened with ICOs is that Bitcoin and ETH, the value of those things went up, and that created essentially insane money illusion, right? And people just chucked. They would never have invested $100,000 in an ICO, but I'll invest like a couple Bitcoin, whatever, because I've got so many Bitcoin now. And I think a similar dynamic there kind of is playing out with ETH with NFTs, because ETH goes up, everyone feels wealthy. They're like, you hear these anecdotes like, I hate seeing the sticker price right on OpenSea. Like, I just want to see it in ETH terms, otherwise I would never actually buy any of these things. So I do worry. The one thing I do worry about, and you called out the financialization of NFTs as a big trend. And, I think if people ever find out a way to take out leverage on their NFTs in general, I think that's a little worrisome, because that provides the illusion of liquidity around assets that are pretty illiquid in general. But I think you're absolutely right. I think I have a ton of faith in NFTs in general. I think I'm actually kind of personally hoping for a bit of a bear market in them, because I feel bad that I missed out, and I want to get some of these things. I want to be in the clubs too. I want to be in these cool NFT clubs. I'm not in any of these things. So, I don't know. That's my rant about NFTs in general. Talk to me a little bit about.
So there's a couple things that touch on there. I mean, one, I think we're already starting to see some liquidity and some fractionalization of NFTs, which is a good thing, right? I think the bad thing is if you try to borrow against NFTs today kind of blindly, then you're borrowing against error, because there's no price support, because by definition the market's not that liquid. But I think that's an important part, like the securitization of NFTs and creating a more liquid market there is going to be something to watch. I think it's more likely that happens in like metaverse land and property, because it's spatially scarce. There is no limit to like the design space of like digital art. Communities are probably somewhere on the dividing line. Do you want to be a punk or Bored Ape or Penguin? Do you want to be part of that in club? I would argue though that there may be a shelf life on all but like the real premier communities, and the more interesting communities are going to be the ones that have like earned NFTs and like kind of earned rep components. I've been around for a while. I'm not going to pay for a punk. I'm not going to pay for an ape. I'm just like and the reason is less that I don't believe that there's upside there, or that I don't fully agree with like the kind of the cultural norm. It's that I just kind of believe that like any group that I'm in, I'm going to earn my way in versus like buy my way in. And I actually think that's going to resonate with a lot more people than we currently consider, because just because a group gets more valuable doesn't mean that the price should get higher financially, right? Like maybe the rep that's required to get into a certain group is higher, but just by virtue of being like early doesn't necessarily mean that like you're one of the 10,000 apes or punks. You're going to be higher signal or more additive to the community as it continues to scale over time and kind of innovate in different areas. to that end, like these almost like these early like PFP communities start to look a little bit more like large seed stage startups that haven't turned over like their early employees yet. And it's easier to turn over employees when when your 10 person team grows to 100 and 5 out of the 10 leave because they didn't scale with the rest of the company, right? It's a hell of a lot more challenging to build like a meritocratic group of people around like a 10,000 person NFT drop. So I think the way that some DAOs are thinking about scaling and using NFTs to represent like early interests is actually much more interesting than like a big digital art drop where you're trying to reverse engineer community. So I'm probably more bearish on some of these communities than the average person, but I think I would compare it maybe most closely to Clubhouse. So the Clubhouse effect is, oh man, I hope someone invites me to Clubhouse, and like I really hope like I get invited to like this stage or this room, this that or the other thing, and I might even buy my way in because I've got FOMO, and then you're there for a few days and you're like, this is a lot of work, or I don't like the fact that there's no permanence. Like, yeah, there's some cool stuff, but I'm kind of over it. Like, I used Clubhouse for like a month. I haven't touched it since, right?
Me
like,
too.
I don't know about you, but I feel like a lot of people are in that camp. And it's not just because Twitter Spaces took over. It's because at some point you realize podcasts are good for a reason because they actually curate information and have like some proof of work that goes into them. You can't just like throw open your phone, disheveled and hungover and with no prep and actually curate a good conversation or build like a good audience. So I think everything that's interesting about NFTs and DAOs is there's going to be a lot of curation that needs to happen to make the successful communities actually work.
Yeah. So first of all, Ryan, if you manage to scale a 100-person team and only turn over 5 people, please tell me your secret because that's pretty amazing turnover rate. We're
up to 60 now, and I was actually, it's funny, I was looking at this the other day because earlier in the year we were at 15. I think we were at like 15 with like 15 departures, but none of them were like accidental or it's just like startups are chaos, and when you're trying to get to product market fit, there's going to be a lot of folks that like are awesome, and like we've got a really good like alumni network so far that's emerging. But I think it's really weird to think that like NFT curated communities or like these early DAOs are going to be any different than like even what I would argue is a pretty functional company because we've scaled well and like actually performed. Like that's not going to be trivial to replicate just because you've got a decentralized community. In fact, it's probably going to be harder.
Totally agree. So I have been really split on DAOs because I kind of am just watching this and intuitively something in my gut is just like, I can tell that this is the future, but I've been really struggling with it because, I sat down, Jason and I, we hosted this conference in Bretton Woods earlier this year, and we sat down with this guy who's, he's a high up member at a DAO that you probably know the name of. And, had like a 2-hour conversation about how does it actually work? How does the structure work? And we both walked away with like, this sounds a lot like working at a really early stage company, only kind of shittier. And I just, but one thing, so we talked to this guy, Cooper Turley, Koopa Troopa online. He's a big advocate for DAOs.
One of my favorite Twitter handles to say.
He's sick. I asked him, I was like, is ABBA the reference there? Super Trooper? He said, no, it's something completely different. That was my bet. I had lost the bet. But one thing that really did stick with me, and I'm curious to get your perspective as the founder of a company. One thing Jason and I have is it's like an informal brain trust. And when we need to make like a big decision on something that we don't have any priors for, right? Maybe it's like sales comp. Maybe it's like this business versus that business. Maybe it's like whatever it is, right? We've got like, okay, all right, you want to ask your dad? All right, I got like one buddy who's done this before, like whatever. And we make like 5 phone calls to random people, and then we like make the decision. And Cooper made this really interesting point where if you start with this community of your 1,000 users, right, power users for your product, and then you can just, whenever you have a decision, you can just run it by the community, like drop it in, like, hey, let's take a quick vote. What would you guys think? That was the first thing where I was like, wow, that actually really, I would pay a lot of money for that. That would be really, really useful to me if I could just instantly ask my 1,000 best customers, what they want, what direction they would go, I was like, shit, that's actually, I had not thought of it like that before. I'm curious to get your thoughts. Like, do you think that would be a valuable thing for you at Messari?
We have a bunch of ideas around community initiatives that we're gonna do in the new year. I mean, we already do this to a certain extent with our analyst hub.
You guys have the hub,
yeah. In terms of like scaling that community and figuring out how to scale the human capital that's required to just keep up with information that's coming out from literally 1,000 plus projects. So we have a lot of ideas around that. I think that is it's definitely interesting, and I think it's underused by companies, right? So like the best case scenario is that you can, at least from my perspective, is that you can run like a holding company and then maybe have different like sub components of the business that or certain product lines that are tokenized versus like the entire company per se. We're still thinking about the ramifications of that and kind of what would make sense for us just as a business. But I think that there are pros and cons for sure for trying to start a DAO from scratch versus trying to start a company from scratch. And Cooper's a great example, because I think to get that done right, it requires a really like phenomenal community lead. And I mean, I actually have a pretty good comp, just like from personal history. Melton was a colleague at Digital Currency Group, and basically like me, her, and Barry were the founding team there that helped kind of scale the early crew and raise that round in 2015, back when it was just a few of us. And of course, like there were the other subsidiaries, but there's no way I could have done like anything that Melton did. I mean, just in terms of like connective tissue with like all those like folks in the portfolio and how they would like connect with like the internal teams that we had, which are kind of like pods, within the DCG universe. I think like that was a meaningful driver of like the value of like DCG as a company. So I would like take that model, and I think that is a very obvious like foundational role that's going to need to be part of like any emerging DAO ecosystem. And I think the challenge for me personally is like I could never do anything that like Melton did or anything like Cooper does on a day-to-day basis, for a whole slew of reasons. One of which is I'm not in many respects I'm not patient enough, right? So I kind of feel like Messari is going to need to have this like benevolent dictator model where we have like some components that are like truly emergent and like bottoms up, but I think it's going to be the best companies are going to be those that have a balance between the two. So finding that balance is going to be something that we get right, and it'll be a work in progress next year.
Yeah. All right. I want to ask you about some of the big things, big ticket items like Bitcoin. I want to talk to you, get your views on regulation, and then I kind of just want to open it up to you and ask like broad questions. How is it going to end of 2022? What are the biggest changes that are going to be, at that period of time versus where we are now? You wrote a whole big section on Bitcoin. You got a bunch of stuff in there that I really liked. It's going to remain the king. That you talked about the Bitcoin ETFs. Like, when you look at Bitcoin, the asset, right? What are some of the most important parts that you want to pull out? What should we be looking at for Bitcoin next year? What are your kind of thoughts on it?
I'd be very surprised if Ethereum or any asset flippins Bitcoin. I think that's an overdone thesis. I could be wrong. I think it is, though, possible for these smart contract platforms to collectively overtake cryptocurrency, like pure crypto monies, right? So if you look at like Bitcoin and Litecoin, and basically all the other currencies don't even really matter compared to Bitcoin. There's such a massive chasm between the two. I think the differences are much smaller between Ethereum, Solana, Avalanche, right? So like all of Ethereum's competitors, I feel like have much closer rivals than Bitcoin does as like a pure play money. So I think that's one really important distinction. I also think Bitcoin is basically the only asset that really has like the mythical origin story that people from a regulatory perspective and geopolitical perspective get pretty comfortable investing in it and actually starting to coalesce around this as like a global commodity money, even though it is volatile. And the game theory favors countries like El Salvador and kind of early adopters that are adding this to their treasury. And El Salvador is maybe first. If there's another like Ukraine or you start to see like a country in Africa do the same thing, then you can start to open the floodgates. And I think the same is true with corporate treasuries. Everybody kind of looks over their shoulders. There's one kind of crazy person like Saylor that does it, or Bukele, and I've never. I actually don't know if I just butchered his pronunciation of his name. Anyway,
I've actually
the president in El Salvador.
Right.
Everybody kind of looks at them like the crazy person, and then there's like a second company or a second country that does it, and then a third, and then you get momentum and it becomes a groundswell. So I think it's much more likely that happens with Bitcoin than Ethereum, because with Ethereum you've got all these throughput constraints, you've got this merge and this proof of stake migration that still hasn't happened. So there's a lot that still has to be de-risked that's not immaterial, and that's going to play out over the course of the next year. As a class, though, could like Solana, Polkadot, Ether, et cetera, like collectively surpass Bitcoin? Maybe, but I still think the odds are, at best 50-50, probably less. I think there's kind of two final bosses to beat with Bitcoin. The first is just the energy consumption narrative and kind of the debate around Bitcoin's role in like climate change and just being a contributor to net emissions. And I have a pretty lengthy section in the report about why that's really overdone. And I used to be very skeptical. I thought it was just kind of like greenwashing and kind of stupid PR for us to try to make that a point of emphasis in a fight. That like, no, actually Bitcoin can be clean and you can leverage renewables and it can be like a battery. And there's a bunch of like buzzwords that I always thought were kind of bullshit and just like us, putting up a relatively weak defense. But I actually think that there's some truth to it. And I think there's a number of folks that have kind of converted that were equally skeptical. Nick Carter had a great piece on this, where no, Bitcoin truly might be able to stimulate green energy investments just because of its role in basically serving as a load balancer between times of peak demand, or as a siphon of energy and a productive use of energy capital when new green energy sources are being installed and connected to the grid. Right? There's a difference between when you can flip the light switch and when you flip the light switch for one of these green energy sources and it actually connects to the rest of the power grid. So I think there's a lot more to unpack there, but I think that's one narrative that's going to be batted down, hopefully effectively in the next year. And then the other big risk. I suppose like the government's going to shut this down is always a risk, but that seems like I don't think that the U.S. government is competent enough. Nor do I think they have the willpower to do that, because it would piss so many people off. And I think it's Bitcoin's gotten too big as an investment to actually do that. Something on par with like gold, for instance. So I'd actually say that the second big risk is just figuring out what happens when the inflation rewards get too low. Is mining going to be sufficient to secure the network? Are we going to have some long-term change to the sacrosanct 21 million Bitcoin will only ever be issued? And I don't know what the right answer is, but to me, perpetual low inflation is not a bad thing. And there's a big difference between programmatic perpetual inflation that's going to be like governed by energy and like a fair race for like a permanent like 1% model. And I think even I'm pretty sure Satoshi even wrote like that he would have done this in hindsight if he was thinking about sustainability. I know a couple of like early Bitcoiners have talked about it, but we'll see. I do think there's a big difference between 1% inflation in Bitcoin that has like a a cap on how crazy things can get, and kind of the discretionary like target inflation rate, which is a central government just pulling all the interest rate and debt levers that they have at their disposal.
I agree with you. You talk a lot on Twitter about regulation in general. One might say you've been needling a little bit. Mr. Gary Gensler, our current SEC chairman, talk to me a little bit about where you think we are from a regulatory environment. Why do you think it's the right idea to kind of push back instead of maybe, extending the proverbial olive branch, so to speak? Like, what are your general thoughts there?
There's no olive branch. We will have no peace until Gensler converts or is out of his current position.
All right, that's wrong. I'll tell you. So
and here's the thing: no one else can say that because everybody is trying to toe the line, and all these other businesses are regulated. I suppose the SEC could come after us and try to make our life miserable, and it would be such a flagrant political attack if they did, because we're an information business. Good luck. But look, this is the frustration that everybody's talking about behind closed doors. And it comes down to the fact that Gensler is not a run-of-the-mill, naive, incompetent political operative. He is a very smart, calculating, productive, and knowledgeable insider that knows how crypto works because he taught about it at MIT, and knows how the political machine works because he was the chair of the CFTC and he's made a fortune in Goldman Sachs. So he's extremely smart, extremely financially savvy, and he knows what crypto is all about. The fact is, he's looking at it as like a chess piece to advance, his career ambition to get into Treasury. And Elizabeth Warren is one of the most influential senators on financial services. He needs her as an ally, and she is very anti-crypto. So that's the starting point. And what I laid out in the thesis is, there's basically like 8 different bits of evidence that would lead you to believe as current SEC policy at the leadership level is completely ass backwards and makes no sense unless you're taking the stance that they're very intentionally trying to curb the growth of this ecosystem because they don't have control over it. This is a political battle, and political battles require political solutions, which include courting public opinion, right? So there's a narrative battle that's at play, and at every opportunity that I see fit, I think it's helpful to remind people that the SEC's current policies, which are the result of Gensler's direction, because the buck stops with him. The SEC's current policies are hostile for the wrong reasons, and they are inconsistent with the Commission's mandate, which is to protect investors, promote capital formation, and ensure fair, orderly, and efficient markets in the U.S. I don't know anyone in crypto that disagrees with those as like mission statements. But to look at something like the Bitcoin futures ETF with its 5 to 10% hidden costs that ultimately accrue to Wall Street, and see its approval but not a spot ETF approval that would cost less than 1%, it shows you that they're acting in bad faith, and anyone it's there for everybody to see. So I think it's important to be very targeted, though, right? And I think the SEC makes for not the SEC in total, but Gensler in particular makes for a particularly good villain because he's not incompetent, and he is doing things that are they're sketchy. Brian Armstrong, in a moment of honesty that was probably regrettable from a regulated business CEO. He nailed it, right? Like it's sketchy behavior. It's dishonest, and I'll continue to call it out, even if he has to dial it back because the SEC is trying to regulate them and slap them with fines and whatnot. So we'll see how it all plays out. But I've not shied away from conflict in the past when you're on the right side.
But let's try to transport ourselves 1 year into the future, right? How is crypto going to look differently? Are we all going to be living and operating in the metaverse at that standpoint? Is that the most important thing to pay attention to? Is this like ETH versus L1 wars? Is nobody going to be talking about that a year from now? Or is that really the thing that we got to watch? I don't know. Big, broad, sweeping predictions. Let's get some headline stuff here. How do you think the industry is going to change a year from now?
Well, I'll probably disappoint people because I think things will cool off, right? And for no other reason, I think it just takes time to build. It takes more time to build than it does to ape and speculate, right? And
Yeah.
like things have gotten way ahead of themselves in terms of like the pace, and it's a pace that's unsustainable like in the medium to long term. So at some point it's going to have to normalize, and depending on like how long you've been in this race, with DeFi summer last summer, and then kind of rotation into layer ones, and like the big Bitcoin rally at the end of last year, then layer ones or first quarter, and then NFTs and their surge. Now you're seeing a surge in the metaverse and kind of everything bubbling up again. At some point it's got to quiet down, right? Just almost by definition, and normalize. So we could continue to go, run really hot and crazy and see the pace just continue unabated for a while. Or what I think is more likely is, we'll see some cooling off period, and something will kind of stop the momentum. Odds are the momentum, in DeFi has already been slowed just because of the threat of overregulation. I think with some of these other layer ones, it's going to be, it takes some time to actually develop new infrastructure that can support all these new applications, that are kind of riding on top. So even the communities that are scaling really quickly, like Solana, it doesn't happen overnight, right? Ethereum's got to go through the merge, right? So there's a bunch of things that I think are kind of happening at the same time, and the amount of money that was made this year. There's going to be some pretty massive tax bills that come due in the U.S. in particular. So I would not be surprised if there's some like tax selling in Q1, and it always happens. It always takes longer to like actually hit than people assume. So I would imagine that we're going to see some similar selling pressure in Q1 of this year as people kind of realize just how big their tax bills are. Because you don't really think about it. You're like, yeah, I know I owe taxes. And then you kind of like double check the numbers. You're like, oh, I didn't realize I owed that much in taxes. And that can kind of take on a life of its own.
So your predictions are it's going to cool off and people are going to sell because of taxes. You're right. Those are going to be unpopular predictions with this crowd. But I fear that you might be right. I think you might be right. At the end of day, the positive silver lining spin on what you just said is that, a lot of people joke, myself included, you're almost weirdly looking forward to the next bear market because there is this like froth and, even just this idea, just opportunity cost that everyone in this industry just feels all the time. And there are people making tens of millions of dollars just aping into whatever. And here I am actually trying to build something and taking my time. And what am I doing? And, I think all the best businesses, if you rewind to the Messaris of the world, right? The Blockworks of the world, they got started in a bear market. And honestly, they're like all these big infrastructure companies that got built, the Fireblockses, the BlockFis, all those companies, they get built in bear markets in general. It's an entirely different mindset that you take. So I do think it is kind of nature healing itself. It's like the fire is burning off the brush, the excessive brush or whatever it is. So silver linings is great companies get built in bear markets. They do in bulls too, but I think more get built in bears. So we can end it on a positive note, but
it's going to be fun.
Yeah.
Regardless, bull market, bear market, it's going to be fun for anyone that's willing to stick around for the long term.
I agree. Guys, we covered it as best we possibly could today. There was a treasure trove and a wealth of information in this full doc. We will link it in the notes. Really, it was like an unbelievable read. I honestly don't know how you managed to do that running a company. So my hat is certainly off to you. Thanks for coming on the show. If people want to find out more about the work that you do at Messari or follow you on Twitter, what's the best way to do it?
So Messari.io for anyone that wants to download the report. It's front and center on the homepage, and will be for the next few weeks. I'm at 2BitIdiot, TWO BitIdiot, and look forward to continuing the conversation and figuring out where my typos were and what I got wrong from the masses on Twitter.
They have a habit of doing that, don't they? All right, man. Well, thanks very much for coming on. I appreciate it. I'll have to do it again soon.
Thanks, man. Have a good one.
Okay.